So first and foremost, I want to thank all of you that have signed up for the webinar. I'm sure I can speak for all the guests that are here today, that the more knowledge you have, the more responsibility you have, and the better board member that you will be, or property manager for those that are managers on the webinar. I do want to mention that I want to give a big thanks to Kane and Bender and also Alex for helping and assist in putting this webinar together. Without your support, we wouldn't be able to do this today. So with further ado, I wanted to first introduce Lisa with Kane and Bender. Lisa, if you could say a little bit about yourself and the firm.
Hi, good morning, everybody. Obviously, my name is Lisa McGill, working with K. Bender Rembaum. We have offices in Pompano Beach, Palm Beach Gardens, Tampa, even Miami right now. So after working in this field for 20 plus years, you'd think you'd seen everything, but this is something that we haven't encountered before. So I think it's great that Affinity and other avenues are offering this education for you all.
Thank you, Lisa. Next, Michael Bender, if you can introduce yourself.
Good morning. As Lisa mentioned, K. Bender Rembaum is a law firm, and we are happy to be teaming up with Raphael and Affinity and Alex to provide this presentation. I think it is a very unusual time, to say the least, and we're happy to be able to provide what guidance that we can offer. As a law firm, K. Bender Rembaum, we represent community associations, full service in all aspects of that representation, and we remain available. We have on our website, kbrlegal.com, we've added a tab for COVID-19 related items, and we encourage everyone to go to kbrlegal.com. It's obviously free to get there and check out those sites and we constantly try to update as well as keep education, and look forward to giving you guys this presentation this morning.
Thank you, Michael. And last but not least, Alex Leonardo.
Hello, everyone. My name is Alex Leonardo from Lanter, Leonardo, and DiCrescenzo. I'm the managing partner. Our firm we're a CPA firm. We provide compilations, reviews, and audits, and we service the Palm Beach, the Broward, and the Miami area.
Thank you, Alex. Well, I'm one of the co-founders of Affinity Management Services. We are a community association management company. We service from Palm Beach down to Monroe County. Our specialty is that we're more of a medium-sized organizations. So we work directly with clients that are really looking for that special touch, looking for to be handheld throughout the process and really be guided. And that's really been our forte thus far. So I think that's good enough about us. I think most of you are here to hear the impacts that COVID is having on your association, or potentially will be having with regards to the financial impact of it. But before we go into the financial impact, I did want to ask a specific question here that I know recently has come up with regards to the common areas in the pool. I know a lot of individuals at the moment are anxious to get outside of their balconies and get outside of their condo. So Lisa, I wanted to direct this at you, Lisa or Michael. Considering, the new orders from Palm Beach, Broward, and Dade County, what's your recommendation when it comes to opening the common areas, and specifically now that Palm Beach has opened the pools? What's your recommendations for association in dealing with that?
Mike?
Well, I'll start, and Lisa can piggyback. Again, these orders came out Tuesday. Broward came out yesterday. So my first recommendation is obviously review the orders and get with your association counsel and your business advisors, if you have a management team, to discuss what the impact is. It's the easiest one. Miami-Dade's order doesn't reference pools at all. So in Miami-Dade County, the prior order on pool closures remains in effect at this time. And so that has to be further investigated if there's been new orders. New orders seem to be coming daily. So we're at this point, though, Miami-Dade doesn't have an open. Broward's order with regard to pools has certain requirements and guidelines regarding both Broward and Palm Beach County do require that CDC guidelines for social distancing remain in effect. That is very important to remember. There is also requirements with regard to sanitizing and maintaining the bathroom areas. One main difference, and I know we won't spend a lot of time on this, so I'll just kind of be one quick point. One main difference between Broward and Palm Beach is Broward has an option of use of pool and pool deck has to be supervised by a sufficient number of people during hours the pool's open to ensure compliance, or all furnishings removed from the pool deck. So it seems to give you an option of monitoring or removing all your furnishings, and that needs to be flushed out. Palm Beach County doesn't have that. Palm Beach County has language which requires that one or more facility staff or management be present at each facility to monitor and ensure compliance with the restrictions within the order. And so there is some, the question comes, what type of monitoring does that require? And I think it's important that you do review these with your association counsel and get clarification. I also think it's important that you speak with your insurance agent. One of the questions that did come up is, hey, we don't have staff, we don't have facility management. What about the board or appointing a committee? And in my opinion, I believe, and there has been some guidance offered from Palm Beach County that's on their website that says, yes, the board or could have volunteer committee. Before you do that, get with your insurance agent. Clarify that if you do have this committee appointed, that there is coverage, insurance coverage. Also ask or inquire as to what type of requirements, maybe signage that should be at the pool, which would help better insulate the association. Get this guidance in writing. But again, I think, and at least if you want to piggyback, but I think the biggest question right now with these things just coming out is get with your counsel, get with your management team, get with your insurance agent, get with your professionals, and get guidance that you can rely upon, because as board members, you're following what's called the business judgment rule. And the business judgment rule allows you to make reasonable business decisions supported by the industry experts you work with.
Well, you're definitely right, Mike. You also have to be cognizant that the cities and municipalities have their own orders, and they're permitted to be more stringent than the county orders. So in Broward, for example, we do have the order from Broward County allowing the associations to open up access to their pools. But Weston, for example, issued its ordinance prohibiting the associations or the communities from opening up access to their pools. So don't be so quick to jump on the bandwagon of just, a free-for-all. You want to do everything that you do methodically. You want to make sure that you're documenting everything, because regardless of how good you are or how careful you are, you always have to protect yourselves as board members and, of course, the association from potential claims.
Correct. And also what we have to keep in mind, and I've been reiterating this with my team as well as with our clients, is that we have to be patient with each other, because ultimately last thing you want is to create committees or board members to all of a sudden become police. That's definitely not the objective of living within a community association. And it's going to be a challenge, especially during these times. I also wanted to provide a tip for those managers or for those self-managed properties that live in Palm Beach. If you are considering opening your pool, do keep in mind that Florida Health does have a specific checklist that must be filled out and turned into them. There's about 9 points. Most of the points are not anything out of this world. They're points that you typically are going to check when the pool maintenance is there. But just wanted to provide that tip so that if you are going to open your pool, that you make sure that you're within compliance that's required by Florida Health.
Raphael, that was great. Yeah. Raphael, just real quick, that was great stuff. And I just wanted to add one last point, because you made an excellent point about enforcement. And I do want to remind everyone, and to piggyback off what Raphael said, is that, right, whether it's the board, whether it's a committee, these volunteers, you're not looking to put yourself in a situation where you're confronting. And so one of the questions that we talk about is you have certain obligations, certain requirements, and enforcement issue has been a question that's come up, not only now, but previously, but now even more so. And I think that's very important that you get clarification as to what you should or should not be doing with regard to that. And by the way, if you can't, as communities, enforce these restrictions, then what the counties are saying is don't open your pools. It's your obligation to ensure these can be followed. If these restrictions can't be followed, then your pool shouldn't be open at this time.
Correct. Excellent point. So let's get into now what we're here for is discussing the finances. Lisa, what's your take and what are you expecting, or what do you believe the associations can expect when it comes to regards to the potential financial fallout from coronaviruses? Do you see any potential claims, litigation? Obviously, there's going to be some increase in cleaning and utilities and so forth, but what's your take on the potential impact?
Well, obviously, you're going to have people that are struggling financially, and we're going to talk about how the associations can prepare for delinquencies and how they can protect themselves in order to ensure their continued financial operations. But yes, I do. Right now, you probably already have increased expenses. Like you said, utilities, for example, everyone's home. Utility costs are going up, and utilities are obviously an essential service that has to be provided to the residents. Potential claims. Now, personally, I believe a claim based upon someone contracting the coronavirus is somewhat attenuated, but that's not your only cost or your expense that you have to be cognizant of. You have to defend these claims. So like I said before, you have to document. If you've increased your cleaning protocol, if you've hired additional staff, if you've changed performance of staff duties, make sure you have that documented so that later, if you are challenged, you're able to point to the exact dates and times that you implemented new policies, how you enforce those policies, and how you communicated those policies with your members. Finally, depending on the type of claim, there are all different kinds of claims that I can anticipate. Now, you may even have disputes with contractors over delaying projects, if you're delaying projects, or if you're not in a position to pay all your financial obligations in a timely basis. But some of the claims may involve people who believe the association failed to undertake its responsibilities, and that caused them to contract coronavirus. Well, if you take a look, meet with your insurance provider or your insurance advisor to discuss what coverages you have in place. Most of the general liability policies do include exclusions for viruses or contaminants. So again, even if the claim is not valid or you're not legally found liable for damages, you have to think about those defense costs. And if you don't have coverage for defense costs, then you're looking at what could be a potentially large expenditure. So some of the agents right now I know are recommending legal defense policies. I don't think they're really that expensive. I think they are more in line with your D&O policy. Remember, your D&O policy is going to exclude all bodily injuries. So your D&O is not going to cover you for that kind of a claim. And if your general liability has an exclusion, having this gap insurance or this extra level of comfort, I think is going to be pretty comforting for you as board members later on.
Of course, oh no, and that's a great point that you mentioned with regards to utilities, because typically most associations, most individuals are working unless it's a snowbird community, and if it is, they're not here at the moment. So your water expenses are definitely going to skyrocket when you have the entire family in the condo. So that's something that you definitely need to keep in mind in your expenses for the months to come. With regards to Lisa, I'm going to keep it here with you. Is there anything that we should be doing now to prepare for possible delinquencies?
Well, sure. I mean, sitting around waiting and saying, woe is me, is not going to be advancing your association operation. So the first thing that I definitely recommend associations do, take a look at your governing documents. We learned this in the last financial meltdown with the housing crisis, that there were a lot of impediments contained in or hidden or sneaked into association documents that can really impede your ability to either levy special assessments. You may have membership requirements stuck somewhere in your governing documents. You have to, if you want to consider financing, you want to make sure that your governing documents allow the board of directors to actually incur indebtedness and to secure the indebtedness with the pledge of the assessments. The banks, in the last subsequent years, we've realized that free ride language that applies to some banks. So under the statutes, the banks, if they acquire title as a result of their foreclosure, have to pay the 1% or the 12 months worth of assessments. But that's not the case if the governing documents give them a free ride. And there are many, many of the governing documents that do provide those mortgagees with the free ride, because that was one of the conditions associated with the development. Even worse would be if the governing documents extend that benefit to third-party purchasers, because mortgagees are limited in how much you can collect. if they acquire title as a result of a foreclosure. But third-party purchasers should really pay any of the delinquency associated with the unit if they buy at a foreclosure sale or otherwise. If that free ride language extends to third-party purchasers, you could be looking at a lot of loss. And of course, any of that loss falls back on all of the other owners. So you definitely want to take a look at those governing documents. As far as operations are concerned, I think it's really beneficial to establish electronic voting platforms. I know Affinity is very familiar with electronic voting, has had a lot of success with it. People are all over the world or country or wherever they are. And obviously you're not, with the social distancing guidelines in place, you're not going to want to hold big meetings. So having those electronic voting platforms set up, people familiar with them, is going to help you if you need to take any votes to move your reserves or otherwise attend to business. Finally, you want to thwart off that potential liability that we just talked about. So again, one thing that you can do to prepare yourself financially is make sure that you have the right and sufficient insurance coverage in place. But you also want to ensure that simply because we're operating under an emergency order or emergency situation does not mean you could ignore all of the regulations, laws, procedures associated with community association operations. Don't relax your procedures or otherwise cut corners, because those actions could also result in claims later. You want to thwart off that potential liability. So there are a lot of things that you can do now while hopefully you're still flush and while your members are still in pretty decent shape to give yourselves those relief later on. Finally, the last thing, and this would really only be applicable to HOA communities, and there are detriments and benefits of it, and people have different opinions, but you may want to think about establishing capital contribution requirements for new purchasers. Again, you don't want those to be super onerous because you don't want to detract from sales and reduce the marketability of any of the properties, but that might be something that can give you, again, that tiny little cushion to assist you if you're running shortfalls.
Yeah, most definitely. And more importantly, at least from a management perspective, I know we've been trying to run benchmarks just to get an idea of what's going on. Again, we're trying to take the mentality of let's not panic, let's strategize, let's look at what we're really working with prior to getting into, an environment that's not going to be healthy. And what we've noticed so far, and again, and comparing April to, let's say, January receivables, we've seen only a very minimal spike. And I'm talking probably less than 0.5% throughout our entire portfolio. Where we may see that change is going to be in the coming months, because obviously unemployment is spiking every day. However, thus far, we haven't seen anything that's immediate. It doesn't mean you shouldn't be planning and strategizing and at least understanding what your position is. We're trying to tell our clients to take a look at your cash flow, make sure you're working with your auditors or your CPAs, take a look at your cash flows, see where your delinquencies are, and then also making sure that you have your strong databases, because as I'm sure Lisa and Michael would agree, associations have the right to go after at least those units that have rental units. But if you don't have that information and you're struggling to find that later, you're going to be behind the 8 ball. And more importantly, also making sure that you're controlling your spending. Now is not the time to really start going into major projects if you haven't started them, to at least see what's going to occur within the next couple of months. So you need to be very strategic. I would say let's not panic. Let's just put a plan A, plan B, and potentially plan C together so that should something arise that we can address it accordingly. Michael, I know I've gotten the question multiple times so we noticed that the credit card companies are waiving fees. We noticed that we don't have to pay our mortgage for a year. I'd like the association to do something similar. I think they forget the nonprofit concept. But what's your take on that? What do you believe associations should be doing in these kinds of instances where these requests come about?
These are great questions, and they're questions that I think are coming up daily and certainly monthly. And my opinion, I think the opinion that we've offered as a firm is board members have a fiduciary duty to ensure that the associations continue to function financially and meet the financial obligations of the association. In order to do that, the lifeblood of the association financially is the assessments. So
Right.
the term, the term business as usual, it applies. And I think business as usual should be the process that boards are addressing in general, meaning that if you're monthly maintenance, then people are paying their monthly maintenance. If people are not paying on time, then late fees are being imposed in general. Now, that's not to say, though, that it's not, it is important, again, there's some compassion that needs to, like you mentioned, all
Correct.
those bigger companies. So there does have to be, I do believe it's important that boards understand they do have the authority to consider hardship requests, and they can address owners on a case-by-case basis. I just don't think it's, and I've had some, some clients or some questions posed to me, hey, can we send out a letter that we're going to waive late fees for the next 3 months or 6 months? And I think that is not a good idea, and because what you're basically saying to everyone is pay when you can, even though whether some people may have no problem paying on time, there's no penalty to them not paying on time.
Correct.
So I think the situation hasn't changed with regard to this. The obligation is on the owner, individual owners, and I remind everybody listening, if you're not a board members are owners as well, and their same responsibility. They got to pay just like everybody else. So it's on the responsibilities on the owners to make their timely payments, and if they're unable to for whatever reason, to communicate. If there's a management team, get with management. If it's an accounting team, get with the accounting team. If it's the board, get with the board, and reach out to them and let them know that you have a situation, what that situation is, and that you're requesting some kind of relief. Then what the boards are going to be able to do at that point is address these things on a case-by-case basis. I do believe, and this may be kind of answering a few questions that we might have, anticipating certain questions, is I think the board, it is within the authority of the board, through its management team or otherwise, to request documentation from an owner to support that they do have this financial hardship. And you should get with your counsel to clarify what the do's and don'ts, and you can get with your management team, your accounting team as well. And work out what those options are. I don't recommend blanket policies for assessments for all owners. I do think that it's important that you also, which is a separate but related note, when you're working your budget, and we kind of touched on this earlier, is if there are vendors, if there is some items that are more discretionary, that you work with those vendors and ascertain if those vendors are willing to wait on payments or somehow offer the association some deferred payments, which would allow the association the ability to pass on those quote unquote savings to owners who are struggling. But I think I think that's what's important, as accounts are becoming delinquent, if owners are not communicating, I think then you need to treat them as you normally would, which is proceed with collections, but encourage owners to communicate. Get a letter, maybe a second letter out to the owners, reminding them of the requirement to make sure that they pay, or to reach out to communicate if they can't pay in full. And then the last thing,
go
ahead.
I'm sorry. So it's funny because, we were trying to take a very proactive approach. And I think, in all honesty, I think we just went a little bit too early on, because we went through 2007. We saw the impacts. And we were sending emails just basically letting residents know, hey, there's multiple options available to you. And we got strong pushback from certain individuals. I can't believe you're doing this when everyone's waiving. But ultimately, our responsibility is to the members, to those same members of the association. We actually had a spike in ACH signups. And we had the same reaction from board members that send a letter to waive late fees. And Mike, I'm so happy that you said it the way you said it. Because I believe it's on a one-on-one basis as well. If you open Pandora's box, all of a sudden you're going to get a 20 to 30% spike of people not paying, just because you're kind of giving them that option. And at the end of the day, from at least I could speak from the clients that a bulk of the clients we serve, they don't have excess funds of 4-6 months of cash flow just sitting in their bank accounts. Most of them, if they're lucky, they have 2 to 3 months, and that's just not enough to be able to sustain the day-to-day.
Right.
Of the association.
Right.
Now,
and part of what you can do there, I mean, listen, and some of the things that we're talking about apply outside of this pandemic. It's obviously more there's a lot more impact right now with the unemployment rates going up and everything else. But money in is money in, and so if someone comes to you and says, "Listen, I have an issue, I got laid off or whatever it is," you're working with them on a. That's why we talk about case by case, because if someone, let's say you're quarterly, and someone says, "Well, I don't have the $1,000 to pay this quarter." Great. Well, maybe that's someone. Maybe you can work it out. Pay $330 each month. So by the end of the quarter, you're still caught up. Or some, and we'll waive any late fee, that type of thing. I mean, that's the case-by-case approach that you work, because different people are going to have different situations, and communities will be different as well.
Of course, of course. Now, Lisa, I want to ask you a question, because I know, there's a lot of organizations, especially in Miami, that are doing furloughs, and in a lot of cases, there's also individuals being let go. What can an association do if that did occur to a resident and the resident did communicate that to the board of directors? What's your recommendation there?
Well, you talked about how you have to take each case on a case-by-case basis, which I completely agree, because everyone's going to have a different financial situation. Again, the core function of the association is obviously the maintenance, management, operation of the property, the physical property, and the improvements. But there's a reason there's a word community and community association. I mean, you are a community of residents and friends and neighbors. So in my mind, anything the association can do to help the homeowners with their individual financial positions is only going to benefit the association or enable them to pay assessments on a timely basis. For example, I mean, there are many people in Florida particularly that have had huge issues with applying for the unemployment. So maybe bring in a resource to assist people on the tricks and tips associated with filing for those claims. Same thing is true with respect to mortgages. The federally backed loans, people are entitled to deferments. But not every servicer is really explaining the extent of the deferments to the people when they call. So I just read an article the other day that showed the VA and FHA loans is probably 10 or close to 10% that are in deferment, but with some of the other lenders, the Fannie Mae and the Freddie Mac, they're really only at 6 or 7% at this point, which of course is significant. But the CARES Act gives the federally backed lenders the obligation to allow for a deferment for up to 180 days, and that deferment can actually be extended for another 180 days. If people have assistance in obtaining the deferment, they're not paying their mortgage. Of course, they're paying their taxes and their insurance, but that'll help them be able to pay the association for the monthly or the quarterly maintenance fees. If things start to get a little extreme, you can ask if businesses have been applying for loans or been applying for relief under any of the various programs. And again, something that's really kind of not desirable, but the CARES Act also allows individuals to take funds from their 401k plans without penalties. And of course, they can borrow it and return the funds there. So there are a lot of options available to residents, citizens of the United States. But that doesn't mean everyone is aware of their options. They may not have the wherewithal to move forward or to effectuate those options. And if you can bring in the resources to help them with those items, then it's only going to be better for you. Plus, you're engendering that sense of community and that sense of community pride and spirit, and that they're all in it together. You're all working together for a common goal.
Of course. And I totally agree with that point. Ultimately, if someone's having a difficult time, I just think it's important for them to communicate. I mean, don't just not pay and leave it up in the air, because you're going to fall into the collection policies. Because I do believe that associations should follow the necessary procedures. If a resident communicates, then, we'll take whatever necessary steps at that point. Something interesting that just came to mind, Lisa and Michael, whichever one you want to chime in here. Obviously, the statute states that, if a board member is delinquent for more than 90 days, whatever the amount is, they're no longer on the board. What happens if there is a board member that does get furloughed and does communicate to his fellow team members or to the team members on the board and says, I can't pay my fees? What position would you take there?
Well, the statute doesn't really give you many options. It does
Yeah,
say
there's no
that
exception.
the board member is deemed to have abandoned their position.
Yeah.
Now, if this is a valuable person that really contributes to operations, maybe they can't officially be a board member, but that doesn't preclude the association from appointing them as an assistant officer or with some other role to advance the association's interests and make sure that everything is running smoothly.
And then once
Hopefully
they
we'll
do bring
see
them,
some legislative changes as a result of this entire pandemic. Hopefully we'll see a lot more when it comes to virtual meetings and virtual activities, but that also may need to be taken into account going forward.
Of course, of course. Michael, you wanted to say
I was
something?
just going to say just that if that situation presents itself, I agree with Lisa. The statute doesn't offer any exception. You abandon your seat. I think Lisa's point is great. You can certainly appoint them in some other capacity, but then of course once they get themselves current, then the board can appoint that person back, although they're not obligated to do so. So
yeah, and another big question that has come up and it's reserves. You know, do we tap into reserves? And more importantly, I think this goes to the point to what Lisa was mentioning earlier. Obviously, you're going to need a vote. You'll need to speak to your attorney. Mike, I'll let you touch it on those specifics. But what I want board members and managers and residents alike to keep in mind is we're less than 30 days away from hurricane season, okay? And we can't forget that, you know, 2 years ago, Irma was an impact, not that major of an impact, but it was an impact. I know we had several associations that were pretty bad hurt and pretty much wiped away the reserves. So I just want them to keep that in front of mind if they are considering tapping into the reserves. But Mike, if you can give some details to the board members or managers, what steps would they have to take should they have no other options but to tap into the reserves?
Sure, and yeah, I'll do that, and then I guess, Alex, I'll kick it to you to talk about your recommendations for what communities should be reserving, things of that nature. But with regard to the process for the reserves, I'll speak specifically about the condominiums and then about the HOAs because they are different. The emergency powers, which are still in effect, do not provide the boards with the right to just take funds out of the reserve. And the point Lisa made earlier, which is what I want to reiterate here, is when you're talking about making sure you just don't ignore the requirements of the Florida statutes, which, you know, with regard to the need to hold board meetings, when the boards are making decisions, and in general, you know, even these policies on the amenities and other things, these decisions should be done at a board meeting, or if sometimes boards have just jumped in and made these decisions, well then ratify them at a future board meeting. These board meetings can be held by conference call or by some sort of video conference where the membership is entitled to attend, but you do want to follow those policies. With regard to reserves, again, same concept. Condominiums, statutory reserves. The reserves may only be used for the purposes for which they've been delineated. And if you want to use those funds for a purpose other than, let's use a simple example. You're operating, owners aren't paying in full. Your operating funds are short because you need to address budgeting perhaps with Alex in the future. But your operating funds are short. You want to be able to use some reserve funds rather than a special assessment. You don't have the board doesn't have the authority under the emergency powers to do that. In order to use reserve funds for a purpose for other than which they've been delineated or designated, you do need a vote of the membership. That vote would be a majority of the quorum. So you first have to know what your quorum is. In the condominium setting, quorum is a majority of all owners unless there's a lower percentage in your governing documents. In the HOA setting, quorum is 30% unless there's a lower number in your documents. Again, condominium has statutory reserves and all boards are obligated to have reserves unless the membership has voted to waive them. The HOA setup is different. The HOA, you're going to have statutory reserves if they were created by the developer at the time of the developer creation and in the budgeted turnover, or the membership voted to have reserves, which is, in my experience, very, very unlikely. There are often, we have many HOAs who have reserves in line items or in their budgets, but they're not statutory reserves, so they're really misnamed. They're really more of a contingency-like fund, which the board would have discretion to use as long as it's for proper association purposes as set forth in the statutes in your governing documents. So you want to definitely get with counsel, as Raphael mentioned. You want to definitely get with counsel and discuss if you're considering the using of reserves, whether it's in an HOA or a condominium setting or even a cooperative setting. Get with your counsel, get an opinion, a written opinion that you can rely upon in the best possible way to address these reserve funds.
Of course, thank you, Michael. And Alex, I want to get your input because I know your firm specializes in doing reviews, compilations, and audits. And you see a lot of the financial statements of the associations you serve.
That's right.
Can you give me an input on what your take is on tapping into the reserves based on your experiences on what you review in these financial statements?
So, what you really all have to think about is what can I do now as a board member or as a property manager with the financials that we do have? And I could tell you statistically with the hundreds of firms that we do, typically an association has 2 or 3 months of working capital, right? The first thing you should do is sit down with your CPA, sit down with someone at the management company, and understand where your finances are. Typically, as a board, as a property manager, when you're running the operations, what do you really care about? It's the income statement. You're looking at revenues, you're looking at expenses. But when you have to make these decisions about what are you going to do, how am I going to find money elsewhere, spend some time on the balance sheet, get an idea, where do you stand today? Do we have excess cash? There's a maneuver that you do in budgeting. When you do have excess cash on hand, if your budget if you have a shortfall, you could use what's called a rollover surplus, and you could subsidize it with cash that you have on hand. That's an option, right? One of the things I would definitely tell you before you tap into reserves, et cetera, is right now, if you have good receivables right now, it might be the best time for you to get a line of credit.
Yep.
And it's something that you really should consider because you, as the saying goes, you want to go to the bank when you don't need the money. If you have delinquencies later, you're gonna lose your credit worthiness to obtain the line of credit. And the first instinct that people would have with board members when things are not going right, the cash is going down, that people are not paying, is, well, we have to raise assessments. And in this environment, if it gets to it, it would be tough on the community. So definitely the first option that seems to be available if you have the right receivables, if you have the right current financials, is to obtain a line of credit. And think about it like this. Usually a line of credit will term out after a year. So think you easily could be paying interest only for 12 months and your current budget could absorb it without having for you to raise the assessments, et cetera. And hopefully in a year, you're in a position that, everything's a little bit more back to normal and the bleeding has stopped. And then you could term out the loan and then a year from now, you could actually go ahead and on your next budget, include the interest and principal to pay back that line that turned into a term. But those are the kind of things that I would definitely look at it before you go to the reserves. For many of the reasons, like Raphael mentioned, is you don't want to use the reserves when you have hurricane right around the corner. If you could avoid it, great. But if you need to, it's available.
I couldn't agree with you more, Alex. I mean, right now, especially for those associations that even do have loans, rates are low. Now is the opportunity to really look at all the angles. When we say strategize, you have to strategize on all fronts. And that means looking at what your current situation is. I know that on our side, we're trying to partner up with banks that are going to do what you're saying, those line of credits that are very similar to a construction loan, where it's a very small payment until the loan terms out. And we think that's really the best way, because tapping into reserves and then hurricane season kicking in, you could be looking at a major catastrophe if everything hits at the same time. Now, Alex, I kind of want to leave it here with you because I know they signed into order earlier on with regards to the reporting requirements that are necessary for associations. I know at Affinity, we're taking the position that now more than ever, especially with the movement of funds and what you're trying to do in strategy, is you need to be as transparent as possible. And now's not the time to not be providing the proper reports. What's your take on that order, and what do you recommend associations to do?
So it was interesting. So for those that don't know, the governor used his emergency powers, and he suspended all financial reporting requirements for associations. It was interesting. Immediately after that, I had the opportunity to speak to different owners of management companies, et cetera. And across the board, even the boards, they're not stopping in making sure these financials are provided. One of the things that I would mention to you, you got to consider the financing the alternative financing that might come along if things get worse. And you got the area that I would definitely want to speak about is the PPP loan. And I got to mention that because that's big in the news right now and what's going on with that. For those that don't know, it's the payroll protection loan. And are associations eligible? Yes. But there's a lot of caveats to that. I'm going to give you a little bit of the basics, and ultimately what you're going to end up having to do is you're going to have to go to your current banker to obtain their applications, etc. But at the end of the day, think about it like this for your association. If you have employees that work for the association directly, not the management company, they're the association's employees. Well, they're based on the monthly average. If you take the monthly average of your payroll times 2.5, that's the amount of money that you're able to borrow. I'll give you an example. If you average $5,000 a month, then you would get $12,500. And what's made this very popular is that once you have it and you use it for qualified expenses, and 75% of that has to go towards payroll, then it would be forgiven. That's what the government is stating. Do we know all the smallest details and if there's going to be anyone that would be disqualified later on? We don't know, but that's what's made it very popular. But think about your association. If you have 1 or 2 employees, I would tell you, is it worth it to go through that process? It's something you have to think about. I know that a lot of the banks that you're working with, if you're at 10,000 and under, they're not going to process the application. You're going to have to find another bank, or you're going to have to deal directly with the SBA to try to obtain if it's a low number. But it's something that is out there and you could use. The other one that's not very popular is called the EIDL loan. It's a typical SBA loan, and it's basically you do go through a regular underwriting the way private companies do. And condos are not used to that. And they need tax returns, they need financials. And it's an interesting process. You could go through it, and they will lend you, it's supposed to be for working capital. That's the real purpose of it. But it's a traditional loan. The great thing about it is the interest rates are like 3.75. It could term out up to 30 years. That's something that's out there. And at the same time, the interesting part is for our industry is that compared to all the industries, the condo and HOA have one of the best underwritings available. We're able to obtain lines, we're able to obtain loans within 24 hours, just because the risk is dispensed amongst all the unit owners. And it's more of a guaranteed revenue than any other industry. Think about all the for-profit businesses that have lost their revenue. So that makes us very unique in how easy it is most of the time for us to obtain a loan. But it's something that if you have to go through the alternative route, you may need financials, and that's just one of the many reasons why boards and property managers have not stopped on producing these financials. Even now with the governor, opening phase 1, at what point will phase 3, is it phase 3 that they're going to put back all the financial reporting? So it seems to be around the corner. So no one's stopping to do it at the moment.
Of course. Now, Lisa, I know that you've done a good job in informing a lot of people via LinkedIn. I know I've personally have read some of your information when it comes to the PPP and the EIDL. Could you give some perspective from the legal side of what your take is on these kinds of loans and associations?
Well, we don't really want to get into the weeds when we talk about like the federal regulations and the interim rules, but the PPP loan is an expansion of the SBA 7A loan, and the typical SBA 7A loans have exclude certain types of businesses. Typically, the 7A loans are not available for nonprofits, which are the tax exempt organizations, colleges, churches, anything that qualifies as tax exempt. The traditional 7A loans also do not apply to what they call passive businesses or apartment houses or residential facilities that don't provide medical care. Well, when the SBA wrote the interim rules, they modified the nonprofit qualification, because the CARES Act specifically says that a tax exempt or certain tax exempt nonprofits are entitled to the PPP loans, but they retained some of the other disqualifications that were not contemplated by the CARES Act. So there's a huge amount of controversy. Some associations have been approved for loans. Again, you'd have to get your application in immediately. You'd have to have a lender that is used to working with the SBA. You also have to have, for the PPP, direct payroll, which is why one of the benefits of working with management is that you have a management company that handles the payroll for the staff that's on site. Plus you have a little bit of flexibility as the client to adjust, like who's going to be working what hours, whether you need staff, increase staff or decrease staff, or how you're going to do that. So many of the associations were told even by their lenders, because it wasn't clear, and SBA actually did give out advice saying that HOAs did not qualify. So they were told by their lenders they couldn't get the applications in. It was a lost cause. And lo and behold, there are many associations out there that did qualify, but those are typically the larger properties that have significant payroll, like Alex mentioned.
Yeah, of course. I know
I
CAI
would
has
give
been doing their part to try to lobby that position.
Well,
I do have yeah.
CAI has got a full court press on that.
Yeah.
So if you're a member of CAI, and even if you're not a member of CAI, you can go to their website. They have the information that you can send to your local legislators or the people that are on the SBA committees, the financing committees. Marco Rubio is really one of the persons that spearheaded this entire program, and they do want that clarification. I mean, they are asking for it. The associations are going to need it, and associations operate properties like everybody else.
The problem is with the timing, though, because the funds are going to be depleted by the time associations can put in for it.
Of course. Alex, you wanted to say something there?
Yeah, it was, you hear these stories about the publicly traded companies obtaining the loans and the publicity that's creating. But one of them that happened was in Fisher Island in Miami. They obtained a huge loan, and there's a lot, and they were put on notice regarding, because now they're saying the administration is saying that they will be investigating to ask for that money back.
Well, actually, Alex, I understood that the community unanimously voted to return the money. They refunded it.
Right?
Yeah,
Okay.
I believe so. Yeah. So we're getting close to about the 12 o'clock. I do know we have several questions here. So
yeah, Rafael, may I just jump in, because there was
Sure.
a couple of things that I wanted to follow up on. And one of the questions is that there was a question that was asked: what if it's a pooled reserve? In following up my discussion on reserves, the statements I made with regard to reserves applies to the pooled reserve as well as the line item reserve. The difference between the two in a pooled reserve is you have a bunch of money that's, again, designated, but it is designated for certain categories. So the point we were making is if you're looking to use reserve funds for something other than which they've been designated or delineated, you need to get that vote of the membership. So whether you're trying to get money out of a roof line item, a paving line item, or whether you have a pool of all those things, you're still trying to take the money to use to supplement your operating shortfall, you're going to need to get a vote of the membership to use those reserve funds. So that answers the question that was on pooled reserves. Also, the other point I wanted to remember to bring up is with regard to lines of credit. Yes, you should, as both Rafael and Alex were hit on, and one of our guys, Will, thanks for that, pointed out, that reserve funds you should try not to use reserve funds as your first line of defense, if you will, because if you do deplete the reserve funds, and I think this point was already made, but I'll reiterate it, you're down the road, you're going to need those reserve funds back. And how are you going to get those back but for a special assessment or something of that nature? So if you can look to do a line of credit or something to as opposed to use those reserve funds, suggested. But with the line of credit, or that is something that you should get with your counsel and confirm what you require to get a line of credit. Does the board have the authority to do so? Do you need membership approval? Do the emergency powers support or not? Depending, but so definitely get with counsel. Many banks will require an opinion of counsel, so you're going to need their support in any event to make sure that it's being done correctly. Just want to make sure I've hit those 2 points before we go.
No, and Michael, it's important that you mention these points because a lot of times, some board members just don't know. There's a cost of doing business, and while during these times we need to, try to be cost effective, last thing you want is to take the wrong steps and not work closely with the right partners to get the job done properly. Even with the whole reserve thing, and I don't want to keep beating a dead horse here, but if you have a reserve study, then that allows you to strategically decide whether or not you can use any reserves. Because if you have a roof that has less than a year left and it's going to cost you $300,000 and you only have $50,000 in roof reserves, what sense does it make to really take that money right now? The approach there would be is to get some kind of line of credit, or the reality is that you may have no choice and maybe potentially have to do some kind of small special assessment or whatever it is. These are situations that are happening not because of just right now. I mean, in reality, with regards to finances, while we are managing nonprofit associations, it has to do with the years and years of not properly either budgeting. No one could have forecasted the corona, but if you would have had 6 months, 5 months of cash flow in your bank account, the proper reserves, you would obviously be in a totally different position. I do have a question here that comes regarding of when to pull the line of credit. Alex, do you want to maybe give some insight of when's the right time to pull it, or how's the proper way that you would recommend to draw on that line?
So the way I see it is you continue to run your operations with the available cash you have, etc. And it's only when you start seeing that your working capital is getting down to a month and your property manager is having to manage cash and move it around, etc., to pay late vendors, then at that moment you could start using the line of credit. But definitely activate it. The banks are not going to have an issue with it not being used for a few months, etc. And for those that don't know, when it comes to a line of credit, banks understands that it's supposed to be more of a roller coaster. You use it and you pay it back, etc. They would know that what's happening in this situation, especially for a lot of these condo banks that lend associations money, is that you typically start with a smaller amount, it increases the borrowing amount, and then you ultimately term it out. And they're going to give you a year to term out, and I've seen where banks will extend it. And maybe you have to increase the line as well. Okay. Maybe they'll do that as well. Don't term it out until you're not ready. Until you feel you're out of the woods. Sure.
And Lisa or Michael, this question here was from Diane, geared, I think, more on legal side, is what kind of documentation is required from an owner that's having, a hardship? Are you guys recommending a kind of payment plan form that should be drafted by legal? What do you believe is the right steps if someone does request that? What steps should the board of directors take?
Well, every board is going to have to obviously work with their counsel, work with management to decide really how strict they want to be or how draconian they want to be in requiring evidence of financial hardship. And we have a comment from one of the members, one of the attendees here today. Yes, please don't open those floodgates because people will take advantage of it.
Yes, so they will.
What do you, what evidence do you want? Do you want to be in the position of requiring evidence that somebody's been laid off or someone's been furloughed? Do you want to be in the position of requiring evidence that they've at least applied for their unemployment, or they've at least applied for or sought loan deferment, mortgage deferments? Again, what exactly do you want for your own particular internal procedures, and that's something that once you have those internal procedures, again, I wouldn't necessarily advertise it to the entire membership, but once you have those internal procedures, you do need to be consistent with your verification process, because that also is something that can come back to bite you in the event that the procedures were relaxed for certain individuals. You want to avoid those selective enforcement claims.
Two
Correct.
points. Yeah, just add 2 points to add. So at least just said 100% agree. One, let's see if I remember them both now that I was thinking about it. Okay. One is everything that Lisa mentioned, by the way, like, what do you as a board want to have to monitor? I think all of those, to answer this question more specifically, are acceptable to request. Hey, to ask, have you applied for unemployment, to ask if you've asked for the mortgage deferment, to get confirmation that they've been laid off. Those things I think are acceptable. But that number two, I would recommend that any information you're obtaining from an individual, documentation or otherwise, be considered similar to, and it's not that it's 100% clear, but I would recommend, in the interest of privacy and surety, I would consider those things as the same way you consider information you get on a sale lease application. It's confidential, it's kept in a file that's not open to inspection as part of the official records, and you can let owners know that if you're providing us this documentation, it's going to be in a locked up place. It's not for general viewership or to be shared outside of what needs to be addressed by those who need to address it in the board or management team.
That's an excellent point, Michael. And just to add to that, you got to be very cautious with the timelines that you're providing, to Lisa's point, because the minute you give someone 2 to 3 years, you've opened up that door that you're going to need to provide something very similar to the next person.
So too long. Anyway,
and in respect,
2-3 years is how can you live with waiting 2-3 years?
Correct. You're a nonprofit.
And by the way, these are immediate situations, and so it's kind of like what I talked about earlier. When someone says, "I can't make the quarterly payment because it's too," okay, well, can we break it down over over the quarter, and maybe you can pay it in full by the end of the quarter, for example. Or if it's a monthly thing, all right, can you pay maybe half this month and somehow pick up a little bit each month? I mean, that's the kind of thing. But I don't think you're in a situation now, and again, case by case approach, but where you should be going out any longer than is necessary. Certainly, it's okay to inquire of the requesting owner, what is it you're asking for? What is it that you'd like to do? Would you like us to, what is your proposal, if you will? And then the board can consider that, review with counsel, review with your business advisor. I want to answer one question about, someone asked, can we borrow from reserves, pay it back rather than take a loan? Borrowing from reserves is not something that that the statute supports. I know there are communities who will say, oh, we're going to just take it out, but we'll put it back before the end of the year. No harm, no foul. But if and again, this is if a complaint was made to the division and the division investigated, it's my opinion that they would find that to be a violation if you didn't get approval from the membership to do that. So if you want to borrow reserves, yes, you can. Another question is, yes, you can say to the membership, listen, we have a shortfall. We'd like to tap into our reserves. If we're not getting your permission to do that, we're going to have to do a special assessment because we need the funds. So, or the same way, if you need membership approval for a line of credit, same idea. You can go and listen, either you let us get the line of credit or we got to do a special assessment. But don't borrow. I wouldn't recommend you borrow without permission of the membership, because if someone does choose to complain and you do get cited, the division's position these days is not a smack on the wrist first time warning. They're hitting monetary penalties from the get-go. So I wouldn't recommend that.
Excellent.
So Raphael, there was one point that I did want to make, because there are a few questions over here regarding rules enforcement and what do you enforce? How do you enforce? Is it worthwhile to go forward with enforcement? At this point, I mean, we're all in a very novel situation. It's a novel coronavirus. It's a novel situation. And I think the associations, the typical advice is don't do anything that's going to put you on the 6 o'clock news. But the point being is that there are some use restrictions that may need to be somewhat relaxed for the intervening period because of those personal situations. I mean, if you have vehicle requirements or maximum number of vehicles, you have kids home from college or people that are living with their parents right now, you may have additional vehicles on property. You just may allow them to, park somewhere or find a suitable place for them to park instead of issuing violations as a result of that. Same thing with occupancy restrictions, same thing with, other types of issues, even although obviously you're loath to allow anyone to neglect the maintenance of their property, but I also saw news stories about how associations were becoming very, very strict with enforcing requirements to pressure clean roofs, pressure clean
Yeah, I read that.
driveways, make sure that their landscaping is pristine. And you know what? Again, you're a community of neighbors. You have to take some things into consideration. Now, I would never advocate reducing or neglecting the maintenance, especially of the common areas. I mean, that is one of the core functions of the association, again, is to maintain common areas in a safe and secure and appropriate way. But I would encourage our board member leaders out there to show a little bit of sympathy and maybe come to terms on, how or what will be somewhat relaxed in this intervening period.
Of
Well,
course.
and I think, and Robert, I think that that's a good point to make. But I think the way, and again, it sounds a little self-serving, but it's why you reach out to counsel who's experienced. Because I would say also, remember, you don't want to say we're not enforcing this.
Correct.
What you want to be saying is, hey, we are enforcing this, but rather than a 30-day notice, you might remind everyone of their obligations to maintain, and that there is a time period within which we would like to see it maintained. It may not be the strict 15 or 30 days, but the idea being that we're not waiving this obligation, we're just giving more time to do it.
Well said, Michael. Well said. Well, in respect to your time and everyone else's time on the webinar, I did want to ask if there's any one last piece of advice that each of you would give to the participants here, and I'll start with ladies first. Lisa.
You know what I'm going to say? Don't freak out. Again, you're operating in a business and you're going to have to handle things in a methodical, logical way. Don't jump the gun. Don't freak out. Work with your professionals, your attorneys, your management team, your accountants, your insurance advisors, and figure out a plan and then implement and execute on that plan. But anything, again, you don't want to be overly afraid of everything is going to be considered liability, or you can't do this, or you don't want to be paralyzed. You want to work through this crisis like you would work through any other type of crisis if you were operating any other type of business. Excellent
point. Thank you, Lisa. Michael.
I mean, we just very briefly, I think it is unprecedented times. Everybody's going through, and what I ask of owners to understand that your fellow owners who have volunteered to run these communities, and your management team who's there to try to assist you in running your communities, they do have this fiduciary duty to best protect the association as a whole. And as much as an individual board member might want exactly as an owner what you want, they are putting they are doing their job when they're saying, notwithstanding my self-interest, I have to do what's in the best interest of the community and rely upon the advice of our expert team in doing so. So work together, try to be supportive in that regard. And in the immortal words of Bill and Ted, be excellent to each other.
Excellent. Thank you, Michael. Alex Leonardo.
What I would tell you, and look, I've worked in private companies, and I've been doing this in condos for at least 12 years now. The great thing about the condo industry, you do have access to all these professionals, and you don't want to feel, one of the ways to lighten the load and the burden that you might feel with what's coming ahead is talking to them, because they're doing it. We're all doing it every day, and providing this advice, reading, etc., and getting educated on how to approach this. So lean on them, make the best decisions. As long as you're documenting everything, sure, there's always going to be someone that's going to second guess it, but as long as you're doing that, then you're doing your job of making the best decision with the information you have now. And that's really what I would say in regards to operating your association from a financial and from operations standpoint.
Excellent, Alex. Thank you. I just basically wanted to first thank everyone that's here. I mean, we had close almost to 300 participants. It goes to say a lot about yourself, your leadership, what you're looking to do for your community. Obviously, we're here to serve you, but you're serving even more individuals. So I want to applaud you for that. More importantly, it's, you know, not only has our planet kind of gotten a reset button where it's been able to breathe a bit, but more importantly, I've noticed in our association world that there's been much more gratitude. I'm hoping that that gratitude lasts for longer than the time that we've been in quarantine. But you know, more than ever, I'm proud to be in this industry. I'm happy that of what I'm seeing with the residents. Let's just continue to have patience, both your professionals as well as yourselves. We're all new to this. We're doing our best to provide education, to guide you, and try to point you in the right direction. But please don't hesitate to reach out to any of us. We're here to help. We're believers of education, which creates, you know, knowledge and responsibility. And lastly, I wanted to thank you, Michael, and Lisa, and Alex for really coming together, because without you, we wouldn't be able to do this. And I also wanted to thank my team behind behind this screen that really made all of this happen. Besides that, we want to close it off. Thank you all.
Thank you very much.
All right,
Thank
you,
you.
everyone.
Stay safe, everybody.
Stay safe.